Americans, finally there is a video for you. First off, this video is not sponsored by Kalshi. So far I have not talked to the team, but I came across some of the markets they had, and I just feel like I had to share. So I haven't been posting as recently often on my channel, guys, but I do think that this is definitely worth a video and definitely worth a listen, just because the alpha is so good. So you're gonna have to see. What are we talking about? We are talking about hourly markets. Here's how you get there on Kalshi, and we're going to talk everything about it. Get ready, get your coffee, get your beer, and let's get started. So the first thing that you want to do to Kalshi is you're going to want to go to after depositing, you're going to want to go to crypto, and then it's these hourly contracts. So for those that don't know, these are going to be things called digital options. Digital options are an exotic option that are going to expire to a binary value. These are not the same as binary contracts. Binary contracts are typically bad to trade. Digital options are typically advantageous to trade. And if you're in my Discord, hint, hint, you'll pretty much know what I'm talking about. But let's dive right in. So there are 4 different things that we can do with these hourly markets, guys. You can also trade other frequencies too, but the hourlies are going to be a lot of action. Now, it's going to be ETH or BTC. I don't love the bands ones. The bands ones are basically ones that are like, hey, is the price going to be between this price and this price? So we're going to pretty much not look at those guys. I'd much rather look at this and this. So let's get into the main guy, Bitcoin. My hair keeps popping out of my hat. It's really annoying. So essentially what we're doing here is we are wagering yes or no on all these different contracts on something that expires in only 52 minutes. So these expire every hour. And if you go to the upcoming, you're going to see, I'll just show you guys my hat. You're going to see all of the different expirations here. You can do this at any hour of the day, as scary as that is. So let's dive into everything about these contracts and what to do. First thing I would recommend, obviously NFA, but either be buying contracts or buying limit order. Just like, I don't love buying in dollar amount. I don't think that's always a great idea. What I prefer to do is to have a standard contract size for my trades. It's more risk managed that way. Instead of having a standard dollar size. What do I mean by that? Well, let's say that we want to wager $100 per trade, guys. I don't think that's a good idea, because what if there's a contract that has a 90% chance of success and a contract that has a 5% chance of success? I'm not putting $100 on both. No. I'm going to be varying my sizes, and that's why you want to do buying contracts. So if you do that, you would probably just do, hey, I always want to buy 100, something like that. Now, it is typically a little bit more advantageous to use limit orders though, and let's get into all the reasons why, okay? Guys, if I was to do buying contracts, I'm gonna pay a fee, and you can see the fee right here. Guys, the fee is going to be the highest on Kalshi when any market that you are buying is competitive, i.e. closer to 50-50. The fees get smaller when you buy farther out things that are less likely to happen or incredibly likely to happen, such as buying no to Bitcoin will not be above here, 99%. Let's go look at the fee. So the excess fee you pay on this of 100 contracts if you buy it at 97 is only 21 pennies. So that's just not as much. Additionally, if we want to go, for something just not likely to happen, if we buy yes, the excess fee is going to be tiny. It's going to be 46 cents, so not really too much. But when we go to things like this, which is basically 50-50, as you can see here, if we go to 100 contracts, the fee is a lot higher at $1.74. Okay? One other thing that you need to know, guys, limit orders do not incur fees if you are filled by a taker. So if you're aware of trading on exchanges, this is basically how it works, guys. If I go to limit order and I go to resting order only, just to make sure I don't pay a fee, and I go to let's say 40, done. Now it might be hard to see here because I'm gonna have to move this a little bit below, but you can see there are no fees. So you only pay fees if you are a taker, not a maker. That's just one thing I wanted to let you guys know, and I'll put that right back there. So if you don't want to pay fees, you can just use a limit order. One other thing, there are no settlement fees. What that means, guys, is let's say you buy a contract and you get lucky and you make money. If we go to the timeline of payout, what's going to happen is about 6 minutes after, it might take a little bit longer, but about 6 minutes after, you'll be able to redeem the market, get your money, and walk away. There are no fees on that. Okay, so I tend to prefer Polymarket with the fact that they have no fees, but the fact is Kalshi has so many active markets and a lot of mispricings that you can take advantage of. let's dive in now that you know the fee structure and how to navigate it. So we're going to go to just contracts, buying contracts, keep this standard, and let's go to it. So the first really important thing you need to know is settlement. Settlement begins 1 minute before expiration. Do not forget that. People in the comment section down here make that mistake all the time. Yeah, exactly. They make the mistake because they don't understand how it works. What they do is it's the average of the final 60 seconds before the expiration. It's not after. You have to remember that. Now, this market, the CF benchmarks, is going to be pretty much the same as Coinbase. So if you go to, I mean, not the same, but within a basis point or two, it's going to be pretty close to Coinbase, essentially. So if we go here, we probably want to graph Coinbase, not Bitcoin to Tether. Graph BTC USD. Okay? It's going to be pretty similar to the benchmarks here. But just do not forget that it's an average price, guys. It's not the final price like Polymarket does sometimes. It's the average price. Do not forget that. Okay? All right, let's dive in. So what is the best thing to do? Well, the best thing to do would be to create a model that would accurately tell you the true probabilities of all of these and weight in the fees as well. Obviously, I don't know if I have time to do that on camera, and I'd rather do that in private on stream. But there are other things we can do just based off of our analysis. So one strategy that comes to mind, guys, is the strategy where essentially you are betting on high volatility and trying to 2x or 3x your money. This is risky, but this is something that isn't always, I think, a terrible idea. Let's take a look. So let's imagine we look at Bitcoin and we think it's going to fall. And, within 40 minutes, it's going to be a lot lower. Let's say that we believe it can probably get to around here, probably get to about 84,000, right? What should we do with that information if we think that for at least one time, Bitcoin's going to touch 84,000 before the hour's up right now? Well, what I could do is to buy no to 84,000 or above. That's one thing I could do. Now, if I wanted to do that, I would do this. I could buy it at 14, but I don't love that price. I might instead want to use a limit order, put a limit order out at like maybe 10 and just see if I get filled. So let's do a little test. We're going to do 10 contracts at a limit price of 10. Submit as resting order only and submit. So here you can see I have an order at 10. We need to monitor this very, very, very carefully, right? We can look at the order book too, guys. So you can see that my order is right here at 10. Because what if price began to move against us, meaning moved up? Then we'd probably want to cancel our order before it gets filled. You know what I mean? But if we do get filled, we pay no fees. That's pretty good. If we exit with a market order, though, like obviously we will pay fees. But as you can see here, this is the order. As you can see, it's good till cancel. I could cancel if I want by just hitting that. But yeah. So our order is right there at 10. What is the strategy here? Well, what I would essentially probably want to do, guys, is I will buy this at 10. And if price goes to 84,000, I have very, very good news. If I get filled at 10 and price goes down to 84,000, then the odds are going to be 50-50 for this market, correct? Because essentially, well, unfortunately, I didn't get filled and now price is going down to 84. Really what I am betting, 84 is here. If price does touch this, then the market has to go to 50-50, all right? Because if price is at 84,000, then there is a 50-50 chance it's above 50,000, 50-50 chance it's below, which essentially means that, good news, I would 5 times my money. What's the drawback? Well, what if price doesn't do anything? What if price goes up? I just lose money then. But I don't think that that's a terrible idea, that kind of trading. So as you can see, our order is just chilling out down here, our 10. Another guy put out a limit order for 500, probably like a hedge fund or a firm or a Sharp, but obviously that has not filled. I wouldn't recommend putting too many active limit orders out, guys, that you don't watch because these are very volatile. You know, Bitcoin's going to be moving all over the place, so be careful when you do that for sure. If I suddenly flip my thesis and was like, hey, I think Bitcoin's going to go higher, you know, I could then start to buy like, hey, Bitcoin above 85,000, which would, you know, I think that's a little bit too pricey, actually. I feel like the math here is saying I should probably buy no, not above 85,000 at 72%, because price is $600 away from 85,000. Doesn't that seem a little mispriced? Who knows? I think that's actually really mispriced still. Oh, and it just went to 88, but you can see the mispricings there. Did you see what just happened? It was very mispriced at 72. You could have sniped it at 72, and price didn't even move really that much. But then it went up to 80, 87, as you can see here. So if we graph this, you can see that it was trading at a very strange value. Yeah, and then it just suddenly changed because it was not efficient. So I'm going to cancel my order here because it doesn't look like it's going to probably fill. We go to no side, and to cancel, we gotta just do this. Let me get to it. If it lets me get to it. It's like being annoying. I think I have to click on this market here. Oh, one resting order. You just click on the, yeah, and then, yeah, cancel all. So we have canceled the order. Obviously, then no trade takes place. Yeah. The other thing that you can also do is Ethereum. So if I wanted to, we could go back to the hourly. We can go to Ethereum, change this. You know, Bitcoin does go down to that price, so that would have been pretty good. Another thing to say about this, guys, if you're ever worried about Bitcoin or Ethereum volatility and like, oh my gosh, it's going down so low, these are not bad contracts to trade when markets are just in free fall. Because the thing is, do you know how hard it is to price markets in free fall with digital options? It's very difficult. It's very, very difficult, and you could probably snipe some orders that are very inefficient as well. So let's go look at Ethereum, and then we'll go from there. 2210 or above, it's trading at 85 or 23. Let's go look at the order book. You can see the order book's right here. Now it's at 77.7. Probably not a great idea to buy any of these because there's such a large spread. You probably want to use a limit order unless it's very inefficient. But yeah, of course, it would have been so nice if we had gotten filled at 10 on Bitcoin because it looks like Bitcoin hit 84,000, which means that in that example, we would have 5 extra money, which would have been fantastic for the video, but you know. So I think that 22 or above, I think this is kind of mispriced. If I can buy no really cheap, if that makes sense. Also, if we think that Ethereum is going to rebound a little bit, what you can do is click more markets, guys. And this is what gets you to the riskier, I would say, because these are farther away markets and it's going to be pretty unlikely that these make you any money. But, you know, you could always try to bid. Price will be below 2170 by 4 p.m. Another thing that you guys can do if you so desire is you don't have to trade hourly. You could trade the 5 p.m. You know, this one expires at 5 p.m. What you can also do, which is kind of interesting, is what if you were to trade, like, let's say a 5 p.m. versus a, I don't know, like a 6 p.m. So if I do that, if I open up both of these markets, this is at 5 and this is at 6. Don't forget, oh, this actually one isn't ready yet. So I'll just do 5 versus 4. One thing that you could do with these that I think would be pretty good is, I mean, there's a lot of calendar spread plays you can make with this. For example, 2210 or above for the 4 p.m. 2210, where is the 2210? Let me go see. 2210 or above for the, what is this, 5 p.m.? They don't have it actually. So if I do 2230, we can focus on 2230 here. We do 2230 here. You can see we can buy yes at 33. And we can buy yes at 2230 at like, we can buy no here. What could you do with this? Well, one thing you could do is if you spot a mispricing, guys, what you could do is such as like buy no to this and then buy yes to this and then take profit at the end of, I don't know, this outcome or something like that. A lot of different things that you can do. I hope that it's just getting the juices flowing for all of the different kind of methods you can use. Very, very, very cool. A lot you can do here. You can do Dogecoin, really whatever market you so desire. You know, Dogecoin has stuff like this. Price bands. What will the price be in 2 hours? You know, stuff like that. Not bad. But I would say the one that I would spend the most time on is probably this one. So yeah, so that is probably going to do it today. I'm going to be trading these for the rest of the day. I just wanted to make these contracts known. There's so many ways you can probably exploit this. There's got to be a lot of inefficiency here. Just make sure you keep remembering the fee structure because the fee structure is a little bit weird. But just all you have to know is that the fees are going to be very high for competitive markets like 50-50s, and they're going to be pretty low for markets that are like this, you know? And the lowest fee you're going to be probably paying percentage-wise is when you buy very, very high probability. If you buy at 96% probability, you're not paying that. You're just not going to pay that much in fees. Because if you look here, buy at 94, well, you pay 40 pennies and 46 pennies in fees. If you buy 97, you know, you're not really paying any fees at all. So these are really cool contracts because you can trade, you know, this one versus this one. You buy yes here, you buy no here. You could do stuff like buy the 3 p.m. versus the 4 p.m. A lot you can do. Best time to use these, high volatility, probably. Worst time is probably low volatility, but when volatility skyrockets and things are just going crazy, this is pretty good, and maybe your counterparty is stupid. So, never know. With that, happy trading, and let's go build some alpha on Kalshi. See you guys.